Testing 1 2 3. Testing 1 2 3. Hello, my amazing, beautiful people. I've not uploaded in a very long time, but I thought to myself, if I'm not gonna upload vlogs, might as well upload trade recaps. So let's recap the entire trading week. Didn't take any trades Monday or Tuesday, only traded Wednesday, Thursday, and Friday. So let's start off on Wednesday. Wednesday, we had Flash Manufacturing and New Home Sales. I've recently learned not to wait for New Home Sales. New Home Sales never seem to be this volatile. However, for some reason, now it is. Yeah, for reasons I'm not quite sure about. So because I have everything marked out already, because I had to go back and mark everything out. Let's start off on the 4-hour time frame. Just forget about the daily. I don't feel like going on the daily. So starting off on the 4-hour time frame, we actually ended up forming this bullish 4-hour fair value gap, as well as taking out these hourly highs from liquidity. Let me scale down in time frame. Let me scale down in time frame again. Okay, perfect. So, didn't wait to execute until after New Home Sales. New Home Sales came out, took out hourly liquidity before consolidating, formed a change of state of delivery back to the upside. A lot of people took longs from here to data highs, maybe look something like this and like this. However, I wasn't looking to execute upon that. It wasn't a clear enough change of state of delivery for me. If I would have executed on this change of state of delivery, my execution would have been somewhere around here with a market order. I just wasn't looking to execute upon that. So anyways, price action had that change of state of delivery back to the upside, fully taking out this, well, clearly taking out this hourly high. Once again, forming an SMT with ES. That's when we had our change of state of delivery back to the downside. I was actually not looking to execute upon this. I'm sure there were a lot of people that also executed short here. But to me, it just wasn't enough confluence yet in order to go short, even though there was a lot of good confluence to go short. I definitely could have gone short there if, um, I guess I would have wanted to. But I waited a little bit just to see whether or not we would continue to validate bearish trend, because if we would, I knew we had all of these lows we could potentially look to target, especially with this higher time frame PD array down here. Price action ended up hair got in my mouth. Price action ended up forming this 5-minute fair value gap, bearish fair value gap. Of course, we had an opposing PD array right here, but nonetheless, once we've seen the changes in delivery back to the downside, validating this bearish 5-minute fair value gap, that's when we executed on the market order, not the retracement. I've been experimenting a lot with change of state of delivery. Before it was limit orders, then I switched to market orders, and I was executing inside of PD arrays or just executing once liquidity was taken out. I've been forward testing change state of delivery for the past 4 weeks. That's why I haven't been uploading any videos, but now I've gotten a good hang of it, and this was my first week executing live with it. So anyways, price action showcased that change state of delivery back to the downside. That was our confluence that, hey, we were looking to validate this bearish 5-minute fair value gap. Targeted, bang, these lows right here, then these lows right here. Of course, could have targeted more risk reward. However, price action ended up spiking. I don't know what this was about at 11:22, but price action ended up just dumping 130 points in like 15-30 seconds. But yeah, so that was Wednesday's trade. 4 minutes. I guess we're on a kind of decent pace. So that was Wednesday's trade. Now let's get into Thursday's trade. Thursday we had unemployment claims and existing home sales. Let's go. Where is it? So this was a clear no retracement day. Um, Probably one day that everyone was complaining about on TikTok. Oh, no retracements. NQ's not giving any retracements. Well, yeah, it wasn't. So, anyways, price action. Start off on the 4-hour time frame. Yes, I do utilize the daily time frame, but just for I'm not trying to go in the daily time frame for the video. Price action retraces back into this new opening gap, continuing to validate it on the hourly time frame. We had a hourly change state delivery back to the upside, but let's say we just ignored that, didn't even acknowledge that. Price action continued to the upside regardless. Our drawn liquidity were these hourly highs, so price action continued to boom, 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 all the way up to those highs, with no retracement whatsoever. I wanted to trade up to those hourly highs, but actually, I was going to say I didn't get a trade. I did get a trade, actually. This losing day could have been an easy winning day. However, I was a little greedy, and I wanted a little more risk reward than my than my 1-to-1. This is how the trade actually would have looked if I traded toward the hourly high. Let's just say right here, we ended up making one retracement throughout this entire move, and that was for this bullish 5-minute fair value gap right here. So bam, bullish 5-minute fair value gap retracement. Then we've seen that change state of delivery back to the upside right here. Bam, bam. Change state of delivery back to the upside. Could have executed market order or even waited for the limit. In this example, probably would have waited for the limit just to get a better fill. Yeah, 101.54 risk reward. I was being a little greedy. Should I have executed upon it? I'm not gonna say I should have, and I'm not gonna say I shouldn't have. The fact is that I didn't, because in that moment, I wasn't satisfied with that risk reward. And that was probably, my fault, whatever the case is. However, lesson learned, I guess. Because if I would have executed upon that, I probably still would have waited for shorts. Regardless, because I was looking to see generational shorts to the downside, or at least to a clear enough retracement. So going back to the charts, price action took out those hourly highs. That's when we seen this change state of delivery back to the downside after taking out those highs. Now, I did see a lot of people go short here. I was also looking to go short here, but like I said, to me, it just wasn't enough confluence yet in order to look to target a retracement into any other P rate we had, or even these lows right here. Solid risk reward, 101.86. However, didn't execute upon that. Instead, waited a bit. Price action took out these internal lows. That's when we actually had to change state of delivery back to the upside. However, I didn't notice at that time. Price action made a retracement into this bearish 5-minute. So what I was looking for in that time was to see this bearish 5-minute fair value gap get validated with the change of state of delivery back to the downside. And that's what I seen. So I executed upon it, got stopped out in literally 2 candles, and realized I had the improper drawn liquidity. So I lost this trade due to not having the right drawn liquidity. Majority of the time, the only reason why I will lose isn't psychological issues, however, instead technical, and the one technical issue would be having the improper drawn liquidity, or having an improper drawn liquidity on the trading day. Now, that only happens once ever so often. Majority of the time, I have a clear understanding of where price action is looking to go. However, in this example, and in one example I was showcased on Friday, I had the improper drawn liquidity. This was that example. So wanted to see this 15-minute get retraced into. However, we didn't need that retracement and continue to validate it, validate bullish confluence, and continue to the upside for the rest of the trading day. Now, I'm sure there was a re-entry somewhere here. However, after taking my one loss, I just took my one loss and got off the charts for the trading day. 9 minutes, solid pace. Now, Friday. Let's go back on the 4-hour time frame. Now, when opening the charts market open, I was clear that we were going to be bullish, at all of these higher time frame bullish PD rates that we retrace into. So I just wanted to see that validated and see these hourly highs taken out. Going down to the 1-hour time frame, we didn't have anything in particular that would showcase to us that we would be bullish here. I mean, we did take out these hourly lows. Not sure whether or not that was an SMT. However, whatever the case was, price action had this bearish 1 hour fair value gap. I want you to remember that, because that is actually the reason why we ended up losing our first trade on the trading day. So price action continued to validate and hold that bearish PD array. On the 5-minute, you can see all this mumbo jumbo. This was just a crazy morning day. 100 points here, 100 points there, 100 points here, and then another however many points there. Price action edged this hourly high, or data high, I'm not sure what this was, and continued to the downside. With us continuing to validate bullish confluence, I was actually looking to see price action go higher. I wanted to see these hourly highs get taken. However, we didn't end up making that move right away. Price action formed this bullish 5-minute fair value gap, seeing that retracing into it. Same old, nothing new. Wanted to see that change of state of delivery back to the upside. I seen it, executed upon it. However, improper drawn proper drawn liquidity, improper timing. So got stopped out. I don't know what all this mumbo jumbo was about. However, I will say with us having taken out this internal liquidity, could have been a huge confluence to have waited for price action in order to continue to see what it would have done. However, if I wouldn't have not waited, which I didn't, still this was a good trade nonetheless. Got stopped out. Good trade, improper timing, nothing wrong with that. Price action stopped us out. This is when we were looking to get off the charts. However, we knew these hourly highs had potential to get hit, or had potential for liquidity to get taken out, however you want to say it. So we continue to wait for price action to see what it would do. Price action continued back to the upside throughout all this mumbo jumbo. And where were we? And right here, formed this bullish 5-minute fair value gap. That's when we seen this retracing back into it. Right here. Seen this retracing back into it and this messy change in state of delivery back to the upside. However, it was clear enough for me to execute upon. I still want to see these hourly highs get taken out. We chopped for a very, very, very long time. And yeah, so I mean, I'll just play it for you guys. This was probably a 2-hour trade, but the change state of delivery was still valid. Price action ended up making a retracement once more for the 5-minute fair value gap. You can see right there, continue to validate and hold it. Took out our first drawn liquidity. No, we did not set our stops to break even. Once we took out the first hourly highs, this is when we set our stops to break even. I don't typically set my stops to break even. However, in this scenario, I did. And then price action hit our final take profit. Well, I'm saying final take profit like I have multiple take profits. Then hit our take profit. And continued to the upside for the rest of the day a little bit before dropping a bit and doing whatever else it did. So, yep, those were the 4 trades on the trading day, trading week. De-risked this week, so only ended the week off with around $800 in profit, but I'm still in drawdown on my accounts, so I guess that profit just goes toward my drawdown, right? But apart from that, yeah, I'll continue to upload trade recaps, regardless of win or loss, just for you guys, and I will figure out what to do. Well, to be honest, if I figure out is subjective, because in order for me to upload like higher quality content, I need to make more money. That would be cool though. But the thing is, everybody's copying everyone else online, you know, the same vlog style. Like, I want to be me. I want to be me, you know, my own person. I'm not trying to copy someone else's content. That's boring. Like, everybody in the, like, business space has the same content, same personality, same, you know, trying to live the same lifestyle, which I don't think is bad. I love seeing it. It's very motivational, right? But it gets repetitive. I'm not gonna lie. Still love all the content creators out there that are documenting their journey. I don't know. I just want to do it a little bit different in terms of content, experiences, I don't know. But anyways, it's enough from me. Thank you guys for watching this video. I love you guys, and I will continue to upload trade recaps. And well, if I keep uploading trade recaps, and I'll eventually upload vlogs. But nothing's happening, so I don't know if you guys want to see a vlog of me scrolling on TikTok. Yeah. Anyways, bye.